This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, November 28th, 2014. So the euro continues to be well capped below the 50-day moving average, which has defined the downtrend over the past several months. The market is now focused on a retest and break of the recent yearly low at 123.58. A break below would open the next downside extension in this market towards a retest of the 2012 base, which comes in at 120.40, only back above the 50-day moving average, which compromised the current downtrend. Sterling dollar. So cable has enjoyed a bit of a recovery in recent sessions, trading all the way back up to 158.25 off of the recent yearly low at 155.90, but clearly the overriding trend favors the downside, and we're still locked within a broader downtrend. The key level to watch above right now is that 158.25 high from Thursday. A break back above would continue the correction towards 159.45, while inability to do so will put the focus back on 55.90. Once the market establishes below 155.90, it opens a measured move down towards the 150 area. Dollar yen. So dollar yen is in the process of a consolidation after recently establishing fresh 7-year highs in the previous week, just shy of 119. Daily, weekly, and monthly technical studies are continue to be quite overextended and favor some form of a unwinding before the market resumes the uptrend. This unwinding could take form either through a sideways consolidation like we're seeing right now, or the onset of a more significant correction ahead of where a higher low is sought out ahead of the next major upside extension. A break below 116.80 would be required to trigger the correction lower, while inability to do so will continue to keep the pressure firmly on the top side with a focus on 119 and then 120. Euro Swiss. Euro Swiss has managed to mount a bit of a recovery off of recent lows at 120.09. Those are 2014 lows that were set on the 19th of November, but the market still remains firmly focused on a test of the 120 barrier, that psychological barrier, while it remains below the previous September base at 2045. A break back above 120.45 would be required to take the immediate pressure off the downside. Aussie dollar. Aussie dollar has recently broken down below that previous 2014 low at 85.41 that was set on the 7th of November, and this opens the next major downside extension, exposing the 81.70 area over the coming weeks. Ultimately, the structure remains firmly bearish, with only a break back above 89.11 to compromise the current bearish outlook for the Australian dollar. Dollar CAD. And dollar CAD looks like it wants to carve out at the next medium-term higher low above 11.22 and resumed the well-defined uptrend for a retest and break of the 14.67 recent 2014 high that was set on the 5th of November. A break above 14.67 would confirm an 11.91 higher low, which was set on the 21st of November, and open the door for fresh upside towards 117. Only back below 11.22 would compromise the current outlook. And Kiwi dollar. Kiwi dollar has mostly been locked within a bearish consolidation over the past several weeks, but the market should remain well capped below 80.35 in anticipation or ahead of the next downside extension below 76.60. That's the recent yearly low that was set on the 7th of November, and towards the 7300 area further down. SPX 500. The S&P 500 has rallied to another record high this week, just shy of 2080, but the market is showing signs of exhaustion and looking for the onset of a correction. A break below 2052, that's the low that we had seen back on the 21st of November, would do a good job of triggering this correction and exposing 2030 and then 2002 further down. Inability to break back below 2052 would keep the more immediate pressure on the top side, with a focus on a potential move up towards the next major psychological barrier at 2100. Gold. Gold is in the process of looking like it might be wanting to carve another lower top at 1208 after gains have stalled out this week and the market is rolling back over. A break below 1175, that's the low that we saw on the 19th of November, that would confirm the potential for, or strengthen the potential for, a lower top and expose a more immediate retest of the recent 4-year lows from at 1131 that were set back on the 7th of November. Above 1208 would keep the recovery off of that yearly low intact and expose the 1230 area further up. But ultimately, only back above 1256 would shift the bearish structure. Oil. So U.S. oil has broken down dramatically over the past several months, with the market trading to fresh 4-year lows down to the 67.75 area thus far. The break has resulted in some extended technical studies, and the market is now looking quite oversold and stretched and potentially due for some form of a rebound over the coming sessions. But with the 2010 low at 67.15, the market should trade down towards that area before considering a potential unwinding of oversold studies and a bounce back above 70 and maybe towards the 75 area. But there is a correction that should be in store given how oversold and extreme technical studies have been over the past several days. That's all for today. We'll see you back on again next week.